there's a strong argument that when it comes to influence over the price of silver and gold, no one holds more influence than the Federal Reserve Bank of the United States of America. But I've uncovered some interesting facts, some interesting ideas about how they make their decisions. Some people think that the Federal Reserve is deliberately moving the United States economy towards a recession. I want to dig in and find out, are they being deliberate or are they dull-witted and dense? That's the 3 Ds we're going to look at in this video. I have some really, really cool things we're going to talk about. Let's get started right now. They're either deliberately moving us towards a recession or they are dense and dull-witted. Because number one, the data that they're looking at is backward looking, always a month or two old. It'd be like you going on vacation, your neighbor calling you on the phone and saying, I hate to tell you this, but your house is on fire right now. And you answering back to him, well, last time I saw my house on Wednesday of last week, it was just fine. And you basing your decision not to be alarmed upon that fact. Backward-looking data is great, but it doesn't tell us what's going on right now. And to make matters even worse, the backward data that these people rely upon is often called into question and deliberately inaccurate. Look at the GDP number, for instance. We had negative prints in the GDP in both of the first 2 quarters of this year. Neither of those numbers take into account inflation. The economy has been shrinking in real terms, but if you just want to look at it in nominal dollar terms, everything looks rosy. What about unemployment? Well, that's a big number for the Fed, right? Unemployment, it's doing great. It's doing wonderful. I would argue the absolute opposite. I think this last month in particular, we had a situation where we had companies desperate to hire people for the last 2 years, okay? So demand was way up here for employees. We have people that are becoming more and more desperate at the same time when you look at the economic statistics, when you look at the consumer credit statistics. We hit a sweet spot last month that we had a ton of people wanting to get back to work and a ton of companies that were desperate for people. As that market normalizes over the coming months, the employment picture is not going to look good. It probably doesn't look as good right now. As a matter of fact, one of my subscribers added a comment in a video earlier this week stating that when he was at Walmart, he asked if they were hiring, and they said, no, we aren't hiring. Foot traffic is down at Walmart. And what about the inflation numbers? The CPI reported by our government. The Fed relies heavily upon that as well. Hey, look, the government says we have 8.5% inflation. Have you been to the grocery store lately? Have you been to the gas station lately? Have you tried to buy real estate or rent a house or an apartment? 8.5% is a joke. So the whole point of this is either the Fed is deliberately moving us towards a recession, or they are very, very dense because they're looking at old data that's also extremely inaccurate. I'd like to think they're a little smarter than that, but if they are, then they are deliberately moving us towards a recession. Either way, gold and silver investors will be just fine. In the end, the forces of nature, the market forces will prevail, and real assets, gold and silver, other real assets will do very, very well, just as they have for tens, hundreds, and even thousands of years. Hey, thanks for joining me here in Ron's Basement. I appreciate you. I appreciate your time. You're always welcome here. If you enjoy my content, please subscribe, give the video a thumbs up. You can share this anywhere that you like. And don't forget to hit the bell notification so you get alerted every time I put out a new video. Until next time, you, yes you, be well.